From the Clear Channel Studios, A Professional Edge by Sean G. Todd, tax attorney CPA and certified financial planner, is providing general information related to taxes, investments, and estate planning. This information is not to be perceived as providing individual legal, tax, or investment advice, as each individual's circumstances are unique. Being a listener does not create an attorney/CPA or an investment advisory client relationship. Each individual's personal situation is different, and seeking one-on-one advice with a licensed professional is recommended. Securities and fee-only investment counsel is provided through Schwab Institutional Member SIPC. This is Professional Edge, a program designed to help you understand the importance of getting counsel and advice from a licensed professional and help you appreciate the significance of being able to integrate your investments, tax planning, and estate planning into one cohesive plan to prevent an unintended consequence. We will be talking with Sean G. Todd of Estate Management Counselors, LLC. Estate Management Counselors, LLC is an independent fee-only investment management firm based in Atlanta with a satellite office in Columbus, Georgia that serves select clients throughout the country. Their goal is simple: to make sure their clients feel confident and secure about their financial future. Sean is a truly qualified professional. He is a licensed tax attorney, a CPA, and certified financial planner. He is also an adjunct income tax professor at the University of Georgia. One unique thing you might not know about Sean: he attends the National Rodeo Finals each year. We will be talking with Sean.
Good morning, Chris. How are you today?
Good morning, Sean. Doing well. How about yourself?
Good. Do you have plans to watch the final round of the Masters today?
No.
No?
No.
I got to tune in about the last couple holes if it's close. Mm-hmm. Other than that, to sit there for 3 or 4 hours watching it, can't really get myself involved that much of it.
You know, I wouldn't say I'm a very good golfer.
Okay.
But it's fun, at least to try.
Right.
That's about the extent of it.
Well, to be outside, drive the cart around.
Oh, yeah, that's the fun part. Actually, I do okay.
You do all right?
Yeah, I mean, every once in a while I'll get a hole in one.
Okay.
But that's rare. Usually putt-putt, I perform a lot better.
Okay.
But no, I'm probably not going to do that. Probably going to try to maybe ride some roller coasters if I can sneak on out of here in a little bit. So
okay.
We'll see how that goes.
Fair enough.
I'll give you the roller coaster report.
Yep.
You give me the Masters report, and we'll be good to go.
All right. Sounds like a plan.
All right. Got a good show lined up for us today, don't we?
Yeah. We have one is why you should hire an RIA CFP CPA during your retirement.
Okay.
And that's reason why we say that is there are a lot of, quote, professionals out there, per se, and it might be like a vice president of investments. And you see that on business cards, and I sort of, just smirk because I could be the president of World Financial. Well, what does that really mean? It doesn't really mean much, but it sounds impressive. I'm the vice president of investments, or I'm a senior executive of investments on business cards. Mm-hmm. But when you delve down a little bit more, then you look and see what that credential actually is. The vice president of investments could have a history degree from a university or be a journalism major from a school. But you know what? They're a stockbroker now, and now they can be a vice president of investments.
Gotcha.
So it's another thing to help listeners out there understand exactly what a registered investment advisor is, what a certified financial planner is, and most people out here know what a certified public accountant is, a CPA. So couple things that we talked about last time, Chris, as a wrap-up. Basically, 61% of Americans, being a stat person, 61% of Americans in a recent survey over 55 years of age said having enough money to have a financial peace of mind is their top financial priority. Mm-hmm. And we always know right now, going forward, Chris, for the next 16 years, and it's hard to put your number or your mind around how big this number is, but for the next 16 years, every single day, we're going to have 10,000 boomers blowing out their 65th birthday candle. So we haven't even seen the pressure that they're going to put on healthcare, nursing homes, assistance to get to and from places when they can't drive anymore. Right. Also on their homeowners, they're not going to want these 3-story homes. They're going to want these 70-style ranches. Mm-hmm. So that's another fact which we need to look at and see what that is going to impact on our retirement going forward. And I'm probably going to see different segments come around on prepared meals. What was it, Food Van or whatever it was that went bust during the .com?
Mm-hmm.
What was that?
I remember.
It was Food Van or something like that.
Yeah, I can't remember what it was called. I know what you're talking about.
Yeah, they delivered your groceries. Well,
Yeah.
they were probably a little bit ahead of their time because think about the older population that are there that might need to be there again to deliver groceries to all these people who can't drive anymore.
Yeah.
So it's this long list of different things coming up. And, I'm jumping around a little bit, but these are pretty important things to consider as you go into retirement. And last week we recapped and we had 7.5 reasons to worry about your retirement. And that half was a pretty interesting comment, but the main reason is we're not saving enough.
Right.
And as we are the older generation, we are fortunately the members of a defined benefit plan. And they had actuaries doing all these numbers to see how much the companies had to put away to meet this obligation for the retired workers. Well, now we are in a defined benefit plan, which is your 401k or your IRA. And now that calculation is on the plan participant, the employee, the current individual. Companies have gotten away from these defined benefit plans because they are seeing how costly they are. Well, they were doing those numbers. Now the individual's not running that number and seeing how much they're going to have to put away today through their working years to have that safe and stable retirement income. So that's number one, that we're not saving enough. We're running the numbers in our office, Chris, and it's astounding how many individuals are not saving enough money going forward. So here's the wake-up call. You got to start saving some more money. Then we talked about the second reason was spending their savings early. That is, they switch jobs. They have about $35,000, $40,000 in their 401k. They're 45 years of age, and they decide, I want to get that new late model automobile. I can just go ahead and cash that money out and pay cash for my automobile.
Okay, not worry about a car payment then.
Right. But what they did was they took an early distribution from that retirement account, which the IRS does not like because they impose a 10% early withdrawal penalty. Now you've converted assets which are for your retirement into a current consumption asset. And here's the other just oil in the water. You just took appreciating assets and bought a depreciating asset. Huge.
Yeah.
So that's the other thing that we have to worry about retirement, that we're spending our savings too early. Then number 3 we talked about was the rising cost of living. If we just have 3% inflation in 20 years, the price of what you pay for something today, Chris, will double. So 3%, 20 years, and in retirement, we are going to be alive for 20 years. At least a lot of our listeners out there are. So that's the other thing on projecting. If I'm trying to accumulate $2,000 per month spendable today in the same purchasing power, well, if I'm going to retire 20 years from now, I can't just have $2,000 of money coming in. I got to have 4 to have the same purchasing power. And people, it's hard for them to understand what that concept is inflation. Things cost more.
Yeah.
Therefore, I got to have more money to have the same purchasing power today.
It's like looking back in the 60s, you could buy a car for $2,000. Now that type of car is going to run you 20 to 25.
Right.
Or,
I remember going up, riding my bike up to the, corner store, growing up in a small town, and taking a quarter and buying a can of Coke.
A quarter will get you started now.
Yeah, it'll say insufficient funds. Do you want a refund?
Add more.
So that's inflation itself. I mean, now you're pumping $1 or $2 in to get a 16-ounce Coca-Cola. So that's inflation. That's real dollars. That's real examples on it is going to cost more in retirement the longer you stay in retirement.
Right.
So that was another big reason. Another 4 was too much debt. A lot of these individuals are getting to retirement and they still have a car payment. They still have some credit card debt. They still have a mortgage. So that is another plan on working towards getting things paid off to where you, reach retirement and you're debt free. Dave Ramsey's a very big commentator on getting debt free. Well, if you don't have any debts, then you need less income in retirement. And that's a critical point.
Right.
So that's another one we talked about. Number 5 was they don't know how much to save. And that goes back to number 1 principle, which basically says individuals are not taking that responsibility to see how much they actually have to put away to reach retirement. And once they're in retirement, how much risk they need to take to sustain the portfolio to be able to pay them out.
Right.
We know right now that a portfolio invested in CDs is paying 1%. You have a $500,000 portfolio of CDs, it's paying 1%. That's $5,000 a year, and we're going to get basically $400 a month. And with that, we also got to pay income tax on that $400 a month. So if we're at the 20% bracket, we're going to pay another $80 in income tax. So now we're down to $400 spendable, which doesn't make much sense. It doesn't get you very far on a $500,000 portfolio. So we've talked about the risks on going out and trying to get a bigger return on that. But when we come back, Chris, we're going to step in to why you should hire an RIA, CFP, CPA in retirement.
I can't think of any more letters to throw in that, so we'll be right back. Professional Edge with Scene Todd and Chris East. Of course, if you want to get in touch with Scene, feel free to give them a call, 877-654-9798, 877-654-9798. Be sure to take a look at the website, too. You'll find a lot of good information there at emcadvisors.com. And as always, you can email in your questions. Send those to info@emcadvisors.net. We'll have more of the show right after this. Stay with us.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Scene Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with Scene, call his office at 877-654-9798. That's 877-654-9798. We've all thought about it. Everyone listening will need one. Not having one can cause untold heartache, family conflict escalating to the point of a lawsuit. One simple thing that avoids all that: an effective estate plan. As a practicing tax attorney, Scene Todd with Estate Management Counselors has completed over 1,000 estate plans during his 15 years of professional practice. He can help you implement an effective estate plan, coordinate your financial accounts, and make sure you have named the proper beneficiaries to maximize your tax savings. Call 877-654-9798 today and let tax attorney Scene Todd help you implement an effective estate plan. Call 877-654-9798 today.
All right, welcome back to Professional Edge with Scene Todd. I'm Chris East. Thanks so much for joining us today. Enjoying the Beach Boys.
That's right.
It is springtime and sneezing, sniffling, and everything is just yellow.
We're on the world stage.
Yes, we are.
For this afternoon, Masters, final
Gorgeous
round,
over there.
green jacket.
I've been to Augusta one time. I've never, went over there close to where they have the Masters, but it is gorgeous over there.
We got practice round tickets from my father-in-law. Actually, he got the lottery for him up in Ohio. So he knew he could come down here, stay, and we went over there for a practice round. And you can't imagine how beautiful it is with the green grass and how courteous everyone is. And, it's pretty incredible. They have not raised the prices on any of their food for forever.
It's just getting the tickets is what.
It's the tickets to get in.
Was it? I heard somewhere they were going for up to 10,000 on the scalpers.
I believe
something.
That.
Yeah, that's crazy.
It's crazy. So,
but if you got the money to spend,
Might as well go.
Enjoy it while you can.
Right. So we're on that world stage of playing golf at the Masters, and that's a pretty good thing to talk about with the correlation of an individual getting ready for retirement or they're in retirement. Mm-hmm. And you got to think, these are pro golfers. There's only about 200 of these people in the United States that get their tour card.
Right.
And when they get their tour card, then do they just, not work with anybody anymore? Do they ever have a coach? They all have coaches. They all have putting coaches. They have swing coaches. They have their regular coach that they deal with day in and day out. Mm-hmm. And you say, well, they're the best in the world. Why would they still need a coach? Well, that coach, just like in financial planning and retirement planning, stands back and observes what's going on. Then they go ahead and implement some changes that they see so they can, keep that person on track to being in the professional golf arena.
Right.
So that's the same concept that we're talking about today, is why an individual should consider or actively seek out having a registered investment advisor, a certified financial planner, and a CPA on their team as they go through retirement. And some of the listeners out there may say, you know what, I handle my own. I do my taxes on TurboTax that are due tomorrow by
which reminds me, I've got to send my
12 a.m. deadline, 11:59.
I'm waiting to the last minute as usual.
Right. You and everybody else. Mm-hmm. So they're due tomorrow by 11:59 p.m. Some post offices stay open, and they show it on the news and everything. Mm-hmm. But that deadline, the person is out there saying, I do my own taxes, I manage my own investments, I got my estate plan in order, I'm done, I don't need anything. My wife and I are fine. Well, my question goes out to them is, what happens when something happens to you? Mm-hmm. If the spouse does not get involved in the tax computation, does not get involved in the asset management and the portfolio recommendations and allocating that, they don't really understand where everything is. Mm-hmm. And now the estate plan they're relying on. But you're gone now. So what is going to happen to the surviving spouse on who they're going to turn to help them and assist them?
Right.
And I can tell you right now, dealing in our practice of law, helping individuals after they've lost a spouse, they definitely do not want to have their spouse seeking out a person at that point in time, because they've just lost somebody they've been married to for 30 years. And I can tell you, Chris, they're not competent enough to make a decision.
Right.
It may appear that way, but they're in a fog for close to a year to make any valid decisions. Well, now they don't know where the portfolio is, how to do the taxes, and they're just going to turn to whoever is on the road, street sign, whatever, billboard, right. Liberty Tax, the guy waving the sign out there, H&R Block. I don't know who they're going to turn to, but they've got to make a decision then.
Yeah.
Versus fostering that relationship now so you can understand how that person works and get a trusting relationship, because you can't keep up with everything, doing the taxes, doing the investments, keeping your estate plan up, unless this is what you do for a living. Mm-hmm. And like we said, is your retirement should be safe and secure. But I come across a lot of individuals I meet down in Phoenix City and in Columbus at the Cunningham Center. They come in and I say, okay, explain a typical day to me. And they say, well, I get up and I go exercise, and I'm like, okay, that's a good healthy habit. Mm-hmm. And then they say, then I come home and I turn on CNBC, and they start watching that ticker.
Yeah.
And they said, oh, some days I just got to shut the TV off at 3:00 because I can't handle it anymore. Mm-hmm. And I'm like, is that retirement? That's not retirement to me. No. Mm-hmm. So they need to progress beyond that, because there's going to be market volatility, but a safe and secure retirement is you don't worry about the day-to-day swings in the market. That's noise that's going on. Mm-hmm. What we need to do is have a diversified portfolio and know that it's going to generate X dollars of income. It's going to appreciate as a reasonable rate. And therefore, you have peace of mind that your retirement is safe and secure. That's the better way to go with that.
Right.
And in order to do that, that's where you step in and say, okay, I probably need some assistance because, going back to the masters and the concept, retirement, you don't get to take a mulligan. And in golf lingo, a mulligan is a redo. Mm-hmm. So
I've had my fair share of those.
Right. Shank it to the right into the woods, and you just say mulligan, put
Whether
another
or not
ball
they're
down.
legitimate or not.
Yeah, now over there at Augusta, it's not legitimate to call a mulligan.
Right.
So in retirement, we basically say, you have one chance to make this correct, and therefore you don't get mulligans to come back and redo this.
Right.
And it's still amazing to me and profound to me, Chris, how many, and I wake up, stop, turn this up just a little bit if you're listening, how many older people have too much risk in their portfolio. We are at an all-time 5-year high, 5.5-year all-time high in the Dow Jones Industrial Average and the S&P. Never seen this height again. And you know what? They're pouring more money in to the market right now.
Yeah.
And it's amazing, the retiree that's 70 years old still has 80% of the portfolio in stocks. That's too much. And I say, if this doubles in value, will it change your life? And they say, no, would you spend any more? No, I might get a new sofa. I said, okay, you don't need your portfolio to double to get a new sofa. But if this portfolio goes to half of what it was worth, would that change your mindset? And they say, oh, absolutely. And then the comment that comes out of their mouth, Chris, which is astounding, says, I just got over that in 2007.
And you're right back into it again.
And I stop there and I say, so you had this portfolio back in 2007. You're still retired, and you didn't learn that lesson on how much to have exposed to the market. Well, I just held on. Well, now you're 5 years older again. How many times are you going to go down and back up, down and back up?
It could be that when it goes down that time, it may not come back up.
It may not come back up. Exactly. So why do you want to take that financial risk, especially when you're nearing or you're in retirement? But it's shocking that they say, I just got over that, which says they were in it. They held on. They had all this equity exposure. Thank goodness they didn't jump out. But like you said, it may not come back next time. It may go down pretty heavy and hard and stay there for a longer period.
Yeah.
I mean, it's taken us since March of 2009 was the bottom back to where we are now. So we're, several years down the road to get back to where we were. So that's another thing on, we don't get a mulligan in retirement. Now, when you take your pension, that's another place where we don't get an election to do a mulligan. When you elect a lifetime only or a joint survivor option, those are irrevocable elections for your retirement. And that's where the RIA that we are, Chris, and a CPA and a certified financial planner comes in and says, you know what? Mary and Jim, you're getting ready to retire. You're getting ready to make some decisions that are going to last your lifetime. These are irrevocable decisions. Here's option A, B, and C. And as we see it, we're numbers people. Here's the benefits of A, B, C, and here's the negatives of A, B, and C. Because there's no magic answer. But now John and Mary, the client, can actually understand the impact of making that decision, because we say, with probability, we say, Jim, you pass away 2 years from now. Here's what it looks like for Mary. Can you survive on this, Mary? Mary looks at you and say, no, I can't survive because the money's gone.
Right.
His pension's gone. Okay, Mary, then we got to eliminate option A because that does not make financial sense for you. Here's option B. He dies 2 years. Here's your income per month, what you're going to have. Is that a more viable option? And Mary looks at us and says, I can live with that.
Right.
But I can't because there's no money coming in.
Mm-hmm.
So we look through that, and that's where putting that together as a CFP, a CPA, and a registered investment advisor, giving objective advice to our clients as required by law, that's where it helps them out.
Mm-hmm.
So that is the person you need to engage in your retirement planning.
The man of many hats.
Yes.
Yes, you are. Before we go to break,
Yes.
we do have something for the listeners.
All right,
we like to give away stuff. Feeling generous today.
All right, let's make the offer, Chris.
How about this? A free book, The Big Retirement Risk. If you'd like a copy of this, call 877-654-9798. 877-654-9798. Hardback copy of the book.
Great read.
Get it in the mail to you. Might even autograph it. You never know.
Yes.
Might be worth something one day for us. At least the reading part anyway, right?
Yes.
So if you'd like a copy of that, absolutely free. All you got to do is just call 877-654-9798, and Tina will answer the phone and get that in the mail to you within a couple of days. All right. What's coming up in the next segment?
We are going to continue off and let them know what the difference is between an RIA and a stockbroker.
All right. Sounds good. Stay with us. More of the Professional Edge right after this.
As a tax attorney CPA for over 15 years, Sean Todd has implemented over 1,000 individual estate plans. He has recently authored an especially helpful guide, How to Unlock the Ultimate Estate Plan. This guide has helped many individuals to understand the benefits of an estate plan and how to avoid unintended disasters. Sean has made every attempt to write this in plain English. To receive this valuable guide, How to Unlock the Ultimate Estate Plan, call 1-877-654-9798 and request your complimentary copy today, or by emailing your request to info@emcadvisors.net. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Sean Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Sean is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Sean Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Sean Todd by calling 1-877-654-9798. That's 1-877-654-9798.
I love the colorful clothes you wear and the way the sunlight plays.
All right, welcome back to Professional Edge with Sean Todd. I'm Chris East. Thank you so much for joining us today. And as always, if you want to get in touch with Sean, that number to call is 877-654-9798. Don't forget to check out the website too, emcadvisors.com. And if you have a question that you would like to send in via the old email, you can do that, info@emcadvisors.net. And speaking of that, we'll get to some emails a little bit later on in the show, right?
Yep. During this segment.
Oh, excellent. Throw me a curveball.
Yes.
All right, let's get back into it.
All right, so we're talking a little bit about why an individual should consider hiring an RIA, CFP, CPA to help them through this retirement gauntlet. Mm-hmm. And basically, you got to have a professional on your team, and professional I use very literally because a lot of individuals may say they're a vice president of investments on their business card, and that doesn't really mean anything because if a person hands you that card, Chris, you got to say, well, what really is a vice president of investments? I mean, tell me your training, give me your background.
If you have to explain it, then
it doesn't mean anything. So these are actually real credentials. The other credential you got to add also is a JD, Juris Doctorate. So as a practicing tax attorney, we add a lot of value to the client relationship. And for example, Chris, April 15th is tomorrow. You have until 11:59 of that day to get your.
So you better hurry.
Yeah, better hurry. Get everything stamped up.
Ticking.
Yeah, and for example, like one thing, client said, "Hey, what about these attorney's fees I paid during my divorce?" are those certain attorney fees that I get a tax deduction for. And here was a pretty significant bill, and if you can make those tax deductible, that's going to save the client, 30 cents on the dollar when you combine the federal and the state tax rate. Mm-hmm. Well, carte blanche, the rule basically says your personal legal expenses are not tax deductible. But then I went back and I said, you know what? Out of this $30,000 of fees that you paid, excuse me.
Paul, I'm getting to you.
Yeah, it is. Out of these $30,000 of fees, those are personal expenses, so therefore they're not deductible. Mm-hmm. But you know what? If we can get the attorney to itemize what out of that $30,000 was related to tax counsel and advice regarding retirement accounts and other tax impact, meaning cost basis, things like that, then that portion of that fee could be tax deductible. Okay. So we went back to the attorney, got a revised invoice, which said out of the 30, about $6,000 was related to those provisions. Mm-hmm. So now, instead of losing that tax deduction and not getting anything on there, we could put $6,000 as a miscellaneous itemized deduction, subject to 2% on the tax return. We ran it down, and by making that and understanding that tax code, the person had done the TurboTax themselves, asked us to review it. We spotted that. That $6,000 came through, and it basically saved them right at $1,500 in tax by knowing that one little thing. So you say, okay, I'm going to do everything myself, or I'm going to work with my stockbroker. Well, I can tell you right now, the stockbroker doesn't have a clue about what qualified attorney's fees are that are tax deductible.
Right.
So that would have been lost, would have been under the bridge, never came up. So understanding all what's going on when we work with a client, with the different disciplines being law, tax, and financial advice, we can pick up on things like that, Chris. And that's where we add that client value for when we work with our clients. It's not just managing the portfolio. Mm-hmm. So that's another aspect of where that added value comes in. And they said, I can't believe that the attorney didn't do that. Well, most attorneys don't understand tax law. Right. They understand getting your divorce done.
Taxes are just confusing to begin with.
Yeah. So, that's why we went back and said, hey, can you itemize this? And the attorney said, sure, we'll break it out for you. Well, now that created a tax benefit for the client, and they're as happy as can be. So that's different apart from managing the portfolio, but it's all part of what you actually get to keep each day and not send to the IRS unnecessarily.
Right.
So when you're out there and you're saying, okay, maybe I do need some assistance, and who do I turn to or who do I hire, and is there a difference? Well, there's a night and day difference on who you're going to decide to work with. Mm-hmm. And we've talked about this at different times. We are a registered investment advisor. We're registered with the state of Georgia with their securities division, and we're proud of that. And the reason being, Chris, is I actually had my Series 7 license, which is a brokerage license that I could sell stocks, bonds, mutual funds, and charge a commission.
The stock man.
Yeah, the stock man. Well, you know what? I saw that, and I'm like, I don't want to sell my clients anything. Right. I am a counselor. That's why I'm an attorney. I counsel and advise my clients, and I wanted that same relationship in the investment arena. Mm-hmm. So, therefore, I surrendered my Series 7 license and became an RIA, a registered investment advisor. And there's a key difference between that because as a registered investment advisor, they have, by law, a fiduciary duty to act in the client's best interest. Mm-hmm. Okay, that's very similar to what a lawyer is. They have a fiduciary duty to protect their client's rights. Okay. Huge similarity. Mm-hmm. They have to act in the client's best interest. As an attorney, I have to protect my client's interests.
Right.
Counsel and advise them. An attorney doesn't have anything to sell them, right?
Nope.
Okay. So, and there's a huge difference on counsel and advice versus being sold something. Mm-hmm. Now, everybody has to make a living. There's no question about that. Nobody is a free volunteer. Right. But as a registered investment advisor, they bring the recommendations, and that is without regard to compensation. So it has to be in the client's best interest. Now, where a stockbroker, they say it's a nuance, but I think it's more than just a nuance. Their recommendations only have to be suitable. Okay?
Big word difference there.
Big word difference, and a big legal difference, too. It has to be, A, in the client's best interest as a registered investment advisor versus a stockbroker, which only has to provide their clients with suitable recommendations.
Gotcha.
Okay? So,
now, do they consider the term suitable loosely?
Very loosely.
Right.
Okay? And the other concept is separately managed accounts. We run across this. Current person's working with a stockbroker. We look through the client portfolio statements, and we see, we have this separately managed account. What that basically says, Chris, is that they're taking the client's portfolio and they're transferring that portfolio over to a separate account manager, okay, who's going to buy and pick the right stocks and sell the right stocks. And you just got to sort of step back and say, you know what? If they were such a good stock picker, why would they need this client's money?
Exactly.
Because
that's a really good point.
Because if they were doing it so well,
why do they need to use somebody else's money? Correct.
That's right.
Yeah.
They would just do their own money, right?
Mm-hmm. And then tell you how good they're doing.
Right.
Yeah.
So you step back and you say, well, if I hire this separately managed account manager over here, they're going to get paid. Okay? Now, the broker that sent the money over there is also going to get paid. So I have two levels of fees on my money. So the only way that I'm going to, quote, beat the market rate of return to overcome these fees, they have to take more risk with my money.
Gotcha.
Okay, more risk, more return. So you say, is that really the concept that I want to have for my safe and secure retirement? I have this separately managed account, and the way they sell this, it sounds sexy, it sounds sophisticated. You're going to have a separate account manager out of Boston. Okay.
What's he going to do 800 miles away from me?
Right. So, and they're going to manage this account and trade it, and then they're going to report to us, and, you can tell your person that you have this separately managed account, and the client gets these confirms that's coming in, and I say, do you really know what you're invested in? And they look at me, no, I don't. Do you really understand what's going on in that account?
Not a clue.
Not a clue. And I say, okay, does that make sense that you don't understand what's happening with your money in your retirement for your investments? If it doesn't, if you don't understand it and don't know what's happening, you need to stop. And that goes along with the Warren Buffett principle, which he said, invest in what you know. So if you don't know what you're doing,
don't mess with it.
Stop.
Yeah.
Walk away. Step back. This is Scene Todd with Chris East here at the Professional Edge.
All right. And coming up in our next segment, we got a little sidetracked because we got talking about that, but we'll jump into the emails.
And continue on.
Sounds like a plan to me. And, of course, if you want to get in touch with Scene, 877-654-9798, 877-654-9798. That is the phone number to call. Be sure to check out the website, too, emcadvisors.com. We'll be right back.
We've all thought about it. Everyone listening will need one. Not having one can cause untold heartache, family conflict escalating to the point of a lawsuit. One simple thing that avoids all that: an effective estate plan. As a practicing tax attorney, Scene Todd with Estate Management Counselors has completed over 1,000 estate plans during his 15 years of professional practice. He can help you implement an effective estate plan, coordinate your financial accounts, and make sure you have named the proper beneficiaries to maximize your tax savings. Call 877-654-9798 today and let tax attorney Scene Todd help you implement an effective estate plan. Call 877-654-9798 today. CPA. With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the professional edge. Sean Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement,